Hi, everybody. Welcome. Today, we want to cover on risk management. So we will go through few topics, and then once everything is done, we will also address if you have any questions for further clarification. So today, we're going to discuss in detail about risk management and stock trading, right? Um, what it means in terms of protecting your capital, what would be the methods, and let's say you have gains, how would you protect those, and so forth. It in market involves a lot of things, a lot of factors. We will cover those as well. So, what is risk management basically? So, in risk management, you can take any of your strategies, right? Or the techniques you learn or the process of a trading career to minimize your losses. That's main criteria, and also to maximize your profits. As long as you do both the things strategically, you will be able to improve your investment trading account, right? So that's one. And why does it even matter? This helps for you to limit your losses, right? We are having a plan, so we will limit the losses. You will have emotional trading based on how the uh, day-to-day trading is going on, or investment portfolio is performing. That emotional stress you can reduce. You will have your capital. Let's say you start with some capital, as long as it's not depreciating, or as long as it's improving, you will be definitely happy about it. It might not impact. And risk management, if you have that in place, it improves your consistency towards your approach. And then eventually, over a period of time, based on your experience in the markets, it will give you long-term success, right? So that's why we have to really, really focus on risk management to ensure certain things are not impacting, especially emotionally. We are not uh, getting away from our thought process, etc. Then, what strategies do you apply, right? There could be a approach called stop loss. Some people still may not know what a stop loss is, right? And then determine your risk tolerance. What would be my risk if I really take a position, or if I really getting into markets, investing career, right? What would be my risk tolerance? You need to plan for that. And also you need to have your own exit strategy. Without exit strategy, that means we are clueless, right? We know how to get in, but we don't know how to get out. Then that's a plan is going to not going to help you on the long run. Then long-term market survival, right? It's not about, okay, you are doing something good today or you made money today. It's about what are we trying to achieve on a long run. So that market survival happens when you have small losses, right? Considering rather than big ones, and then you develop a slow method but consistent method. And from every mistake we make, right? Every mistake is not is going to be more or like losses. Or from every loss, what is the takeaway? The whether it was your entry was not great, your research was not great, or the kind of stock you picked was not the right one. So, like this, many factors. Every loss will teach you something. Maybe you were too much position into it, where you could have reduced your position. We don't know. So all that will help you for your long-term survival. And comes the main part, right? Capital preservation, then profit generation. Why it is important? The reason being, the small losses, the less the losses are, then the capital is going to be in your hand. If you are not going to have a risk management strategy and you extend your losses, that means, let's say you have $100, you're not protecting them, you lost all your 100, then you need to go to your bank account. And as long as it happens over and over, it's not going to give you a fruitful opportunity or fruitful career in this place. So for that reason, rather than focusing on, okay, I'm starting funding my account today with $1,000. Okay, tomorrow I'm going to make 2 grand. Okay, 3 months from now I'm going to make 2 grand. Rather than thinking about that, you work on your risk management strategies and then keep your losses small to the best possible way. That way you have capital for next trade. In most cases, what happens, right? We have $100, we spend it, we don't want to cut our losses, although we see market is not working in our direction for whatever reasons, or that particular stock is not working for whatever reasons, and then you lost $50 out of it. And tomorrow, nice bullish momentum comes, or the same stock, for whatever reason, it started doing what you expected, but the next day or the next week or the next month, where you were sitting with only $50, that is going to cause you a opportunity loss. Rather, if you had kept your losses small, you would have had protected your money to play another good opportunity, provided we also learn from the losses. So you would have not repeated the same thing. That means you are improving yourself. By the time this $100, let's say, vanishes from 10 mistakes, you would have learned something much better than the one big loss where you don't get to learn anymore. You don't have money to first even get in and try for the opportunity. Okay. And then if you see, you need to have a trading psychology first place. Why that is important? Today, let's say you're too happy, you don't care losing $1,000. Let's say you're too sad for whatever reason, or your work pressure is adding one or the another way distraction, but still you want to do some trading here, or you want to have a positions for both short term or based on your goals. Emotionally, you are not in the right place to be able to make proper decisions. When you're not in that state, it is going to add a lot of burden to your thought process. So emotionally having a stable mindset and clear plan is very, very, very important. The next thing is, we are, as a humans itself, it naturally we get some of the uh, uh, urge, right? You might want too much money be to made in a single day, or too much money to be made in the single stock you were in. So that kind of greed pushes you to unrealistic thought process, and eventually it is not going to give what you're looking for. Slowly, when it's depreciating, you're not making right decisions. So greed, we have to control, have a clear plan to overcome that greed. Same goes with the fear, right? So you think, okay, I made good money here, and you're too quick to sell it, even if it is performing, then also you are giving up the gains, right? You need to have a strategy to protect the gains and maximize your profit. You need to have a strategy to not have big losses, so that way your account is protected. So having greed or fear is going to have an impact on how you going to make your decisions. How do we overcome that? So these are the points we always memorize ourselves, or we tell to ourselves, okay, that loss has treated me that I was emotionally not in good shape. Maybe my manager was pissed and I was not happy that day for whatever reason. Okay, that loss has taught me I was looking for $5 profit. People were saying $10 profit. People were saying it would go to $20, $30. The greed took over. All these people who talked about 5, 10, 20, they are gone. They might have cashed out. They've gone long away. They would be in beach, or they would be in a bar, or whatever they like they be doing. But we were following the crowd. We didn't have our own plan, and we were very, very greedy. It's not going to give you a good end result. So how do we avoid those greed? How do we avoid those fears? Is something we have to definitely work on, right? So then, good rational mindset, right? How do you eliminate all your emotions? How do you have a clear plan? We talked about having some strategies. So you have those in place, you have a process in place that is going to help you, do consistent outcome or consistent approach for better development. That is also going to build confidence. Okay, this is I have done with this plan. Just like any other, buying a home, having your career, buying a car, right? The defined approach you have, you foresee your things. Okay, this is what I want to do, and you have to plan for it. You have to execute by putting hard work. If it requires funding, you have to plan for that. All this has to go cumulative. In one day, overnight, you cannot do it. Same is the trade, right? Somebody says something, or you just got to know Walmart. What is Walmart? How does it fit to you? What it is going to do? Why I'm going to even get into Walmart? That kind of homework with a plan of why and how I'm going to have a plan if my why fails is going to add a lot of value, right? And then you calculate your risk, and how do you manage, right? You calculate what is my maximum loss if a worst case scenario happens. We all should know these are there are a lot of variables that are out of our control. Okay, so you need to calculate your risk, and then however you are going to manage that risk. Let's say you put $100, all is going to go to zero. Then what are you going to do? So like that, you calculate your risk, then it's going to help you. Same way, like I said, I just gave an example of Walmart, but the security you're going to, the equity you're going to look into, what kind of behavior it has. It's very important that we learn about that, right? You want to manage something. You want to manage uh, your car. You need to know how it works, what it could be, what kind of performance or speed it maintains. So same way, you need to know the behavior of the stock. If you know the behavior of the stock, you will be very much in the process of executing as it requires, versus you go by a different plan, you apply what you apply for a $110 stock to another stock, etc., etc. They both act very different behavior. They both act differently because every stock carries a different behavior. We talked many times. Tesla, it makes big moves, or it has a cult following, etc., etc., right? Because huge drawdowns on that, buyers will pitch in, versus huge drawdowns on stocks that are not famous, that we think fell 50%. This is the time that will fall another 50% from there. So the volatility you should be able to understand based on what stock you're looking into, etc. Okay. So based on all the strategies, etc., you calculate your risk, and then you have some stop loss management. How do you do that stop loss management? We'll talk more. We'll talk in detail too if you require, but you need to have that already planned upfront, basically. Okay, so this one, risk per trade, right? So you need to define your risk. Without defining your risk, you're clueless what to do. So some people like for example, even $1 million portfolio, they put only 2.5% of uh, uh, portfolio worth into each position. They might put 100 positions, they might put 80 positions, whatever. But you need to define what works best for you in terms of that. That way you have, okay, clear understanding. This is what I need to get into this position. I have some more positions to cover. I will have some cash always, right? Some people go entire portfolio value into position. Some people they do not. So you need to plan on that. And the best part is when you calculate that, you need to evaluate your risk reward ratios. Very, very important. The more precisely you will be able to do this, the better outcome you are going to get, right? For example, I recently traded one stock, okay? This FBLG, this was just 2 days ago. Sometimes some of the trades are very scary to share because it can happen anything. But after the thought process and I did it, I felt, this was a good one I could have shared. What happened? Around the moment market opened, it started pumping on this day, which is 10th. And then it did a pullback. This is a daily candle, so you would not see, you only see what happened on the entire day. I'll show you on a quick chart, but so I entered at 270, $2.70. And my risk was, let's say if it loses the closing price of previous day, if you see the closing price was around 260, okay, on this one. So the moment it loses this value, I'm going to get out of this trade. And then let's say it gives me re-entry, or if it's performing, if I want to take a chance, I will get in. But at that point of trade, I thought anything below to this, it might go further down. So my risk is 260. I entered around 272 or something. So a 10-cent risk, let's say. Then I was calculating what would be my reward. As long as I get a 10-cent reward, okay, that's something I can trade. But when I thought my level of value could be, somewhere here, which is nothing but, around 360. So for a 10 cents risk, I am getting almost a $1 profit. But it did up to 410 or something that day. I think 422, but I was out around 370. But you see, I had a $1 opportunity on a 10-cent plan. So my risk was 1, my reward was 10. 1:10 ratio. It's a big, big possibility. It's a good trade opportunity. This is where, right, we were talking about position sizing and all. This is where I will see clearly my risk ratio and then my portfolio holdings, my portfolio values, and then plan my entire strategy. So like that, this risk reward ratio would be very, very key for your success. How do we determine those is something we talk in detail, but you need to have that in place. What am I risking? What am I getting, right? You're starting a business. Let's say I'll come and say, hey, put 100K here. You're going to ask, or you're going to think like, because it's a general sense, we will usually think, well, if I put 100K, what am I getting every month? What am I getting every year? That's the risk, that's the reward you're asking, which for the risk you're putting in. Coming to stocks, we forget all that. Emotionally, we forget. Greed and fear takes over, we forget. Or we are not really equipped with the kind of knowledge we need to before we start, we forget. So that's the problem. As long as you cover that few things that are required, you might always think about, well, I'm buying the stock at $30. What is my plan? What am I risking here? What am I getting from here? Simple. When you have answers for those, then only take a position. If you don't have an answer for those, don't get in. right? That's exactly what you would do. If I come and ask you 100K, there are so many people who are having millions of dollars. Let's say I go and ask, hey, this is a great opportunity. Can you put 100K? You're not going to do that. Versus a stock, we blindly follow. When you blindly follow, you're going to take a dump. So risk reward ratio calculation is very, very key. Okay. That brings, we talked about having a proper strategy, right? We talked about having a proper emotional mindset, and we talked about having proper risk reward calculation. When you have all those, right, what is my position sizing looking like, and what is my stop loss behavior going to be? You need to have this plan as well. That way you can do much, much better trading of opportunities, right? So you determine your position size based on either you based on the portfolio values, and then the type of trade you're getting into, right? The type of confidence you have for that risk versus reward. All this what we talked in last few minutes will help you figure out the best position sizing that you would like to go. Right? And then the same, right? What kind of stop loss orders you have once you once you get into a position to limit your losses, right? So what happens? Basically, when you set a stop loss, it's going to execute based on your strategy you planned. Just like I got the stock at $2.70 or 72 cents. And then you had a plan. If it goes below 260, go for a execution. And I want to look it after. However, I prefer mental stops. It requires some actively looking at it, but as long as I know what I'm going to do in next few hours, next few minutes, or next few days or today. So based on that, I mostly prefer mental orders. The reason being, people say all goes deduct and then they swipe off and then keep moving. That's something when people talk, I got to know, etc. But I never see a proof for it. But if you're based on, like I said, if you're busy going away, then you will set it, I guess. But otherwise, that's something you keep in mind and execute it, right? So the stop loss can be, like I said, for the trade I picked earlier, I will just go ahead and set up a stop loss. And there are some things called I'm moving towards 360, my target. Now, maybe let's say I have $1,000 shares, sorry, 1,000 shares. Maybe I want to clear off or most of it. But the momentum of the market is giving me confidence that it might go more. At the same time, we just learned about not being greedy. So maybe I'll set up some trailing stop loss by taking some off of the table. And for rest, I'm not like, okay, looking for a complete gainer and letting them wipe out my gain. Rather, I will set some trailing stop losses. So that way, if it's moving further up, I am moving my stops and it is going to give me better advantage. I wanted to sell it anyway, so I'm going to get a better advantage. If it is not, the downside protection also you have, you just took a chance based on at that particular moment circumstances to improvise your gains. Okay. So but we are talking, okay, I want to set a stop loss. Well, fine. I want to set a trailing stop loss. That is also good, right? But how are you going to do it? The scenario I explained, I put too tight, 10 cents. It could swipe off for the very next minute. But for that conditions, for the homework I did, that's all I planned for, right? You don't want to put too tight on many occasions, because too tight, you're going to get it. And small losses, hundreds of those, that means you're going to take a hit. You put too extended. Oh, I took at 270, I want to do at 2, then it's going to be maybe too extended and I'm losing more than what I'm supposed to lose on the trade, right? So that also is ineffective. How I'm going to make it effective? That's where, you need to use technical levels as well to figure out how the stock behaved in terms of price from past days or in the past, right? That will give you some idea where more buyers are stepping in, where more sellers are present, indirectly bringing the topic of supply and demand. So, irrespective of keeping these concepts aside, the main goal is how do you have some technical levels in mind. So maybe you will give a edge to be able to have good stop losses, right? And it also depends on type of trading you're doing, etc., to get there, which we'll talk in the next few minutes, right? And then portfolio diversification, right? As long as you do this, maybe you are minimizing your risk. Your position sizings are planned well. That means you might be able to do much better performance. Some don't like it, some like it, but huge uh, institutional firms or the firms who take accept individual money and trade and pay off based on the terms agreed, etc., they definitely diversify into a lot of things. If they're doing that, there is some strategy that they own that is helping them. They're not putting everything into Amazon, they're not putting everything into Meta. They might be sizing more into those, but they have a strategy. They are getting to good number of positions. You figure out how that is going to be really helpful based on your mindset, right? That is one way to just maintain your portfolio. Okay. And then, well, you have a great plan about you have a great mindset. That's good. You practice, you did yoga, whatever the things, you got that. You also had um, risk management strategies already planned, learned in whatever means it is required. You also have some technical knowledge. That is great. And you have a portfolio of certain size. You got the knowledge about how to manage it. You have a plan there as well. But after all this, after all these things are under your sleeve, what is exactly your mindset of trading you want to get in, right? Or what kind of a trader or investor you want to be is something that you have to figure it out. There are few things that happen day to day, right? There are few things that over time pay, and there are on a long haul. So types of trading are pretty much into day trading, where how do you emphasize on day trading? Is any news going to impact? Is that could be for a broader economic news related or a stock related, right? Somebody gives some upgrades for a stock. For example, Morgan Stanley does some upgrades, or Goldman Sachs does some upgrades. There will be an impact on market to the max extent, unless micro level of economic events are overtaking, then it might not, but there will be impacts. But do you have a bandwidth to do day trading? Are you occupied with another professional job or professional business you own that you run during this market or etc.? Then it doesn't fit to you, right? So you have to know where you are good at it. You could be swinging things. You find some trades where they are moving nicely since few weeks, and highest they are setting up for good high probabilities. That's where I bring up, I use ThinkSabio, I use their weekly reports, because the stocks that are inching higher every week are being put in those reports very clearly. There will be plenty of stocks. It's a market with 10 to 13,000 plus symbols. So from that, what kind of strategy you're trying to build, accordingly you'll take up positions, and that could be a swing wherein you have you have an active approach that you can monitor on a day-to-day, once in a while, right? Then you will take that approach. But there are people who won't have any time, energy, or interest, right? Then maybe you aim for very, very long haul, considering you know the potential of stock market, you want to be in it, but on a day-to-day or on a short-term time frame, you won't be able to really pay great attention or give the enough interest towards it. Then you are planning for the long-term investing. So that means these three brings different kinds of risks and different kinds of rewards. So if you go for a day trade, let's say I bought a stock, I can aim maybe $1, maybe 10 cents. Basically, it's best to talk in terms of percentage, right? Maybe a 2% more, a 1% more on any stock you pick. That's why instead of dollar, if you talk in percentage. So versus a swing, you can get 15%, 20%. Versus a long haul, you can get hundreds of percent, 200, 300%. And the same will be applicable on the downside too. However, that's where you're planning rest of the things. Your position sizing, your risk management, your approach towards it. How do you size them and bring it to a good investment, right? So that's why you have to figure out what is your real strength. Where are you good at? You're good at day trading, you're good at swing trading, you're good at long-term investing. And then that goals also will be evident very clearly. Otherwise, we are a different kind of natured person and we are trying to fit into different box. Naturally, it won't work. So what kind of trades and what kind of risk reward you have to expect from that? Basically, you could be, short term, small ones, long mid swing, we have a decent winners. Long, you will have a multi-baggers. And then once you understand these risks, right, you understand, you now determine what kind of a trader you are, where do you fit, what mindset do you have. Everything is figured it out. You also mastered about few things in terms of managing portfolio, managing sizes, managing risk. But now you need the opportunities. Where do you see the opportunity? You have opportunity in stocks, you have opportunity in options, and there are different ways to do, right? But on a high level, people jump into both equity trading and then option trading. And that brings different kinds of risk then. What are the risks with stocks? A market risk is there, like we talked. If let's say now we are about to get an interest rate decision, maybe it impacts positive, maybe it impacts negatively. That's the market risk, overall market economic risk. And then we talked earlier about getting to know the behavior of a stock, right? Company specific risk. Simple example I take is, like I said, you have different cars from different makers, their engines work differently. You can't run a Kia or Ford over 100,000 versus a Honda. Both are performing very differently. Their resale values are different. Same way, each company has its own way of movement or a trend. So how do you identify that? Then that brings different kinds of risks. You want to put a $1 moves, then it can swipe in just 1 minute, right? Versus some, they take whole day to get to that. Again, goes to the same value of percentage move, average daily range, how much average the stock can move. But by the stock itself, it will have a behavior like a 30% drawdown on good stocks. Maybe it's a buy for short-term trading, or if you prefer, if you have high confidence long-term, right? So that kind of company risks versus some small companies, they dilute, right? Let's say stock moved 100% overnight for whatever reason, for whatever conditions, they get immediately offering done. You holding that thinking, okay, one day I got 100%. If I wait another 1 year, maybe this is going to go to another $20 from here, which gives me another 200-300%. Well, next day morning, it might be down 50%. So what kind of companies you're trading or getting into, what risk they carry. And coming to options, it's a big ocean. There are a lot of strategies with it, but options, the main thing we need to know is the decay with time. Let's say a stock is just sitting there without moving upside or downside, right? Or if the stock is going in the opposite direction of where you thought or where you bet, both ways you're going to lose big money. The decay of time is going to cause a lot of value loss for the options. So like another thing is the volatility is going to add the pricing. The moment volatility reduces, the pricing premiums are going to change. So these risks with option we have to understand on a high level. And if you go in depth, there are so many other things that are implied for those moves. But without the time decay, it's going to lose value. So you have to be very cautious. It is time bound, right? Within a finite time, it has to act in your direction of your bet. Versus stocks, it's all about over time they perform, they go up and down, but you define your risk, you define your plan, and then stick with it. That is going nowhere. Versus an option, it doesn't go with you because it's a time bound. Okay. So those things, So let's say, people have a lot of stocks, or they have a good portfolio. Depending on that, some we can do covered calls to continue to gain some money, right? Let's say you have under stocks, you can buy, sell, puts, those strategies. I'm not good at these, and I never tried. But bottom line, if you have holding shares, then you can do this for passive money. That's what they do. So that is some hedging process where you're trying to maximize your gain, right? We talked about how do you cut losses, which is fine. That is protecting your capital, that is giving you confidence, that is not putting you into too much pressure, overnight sleepless nights and all that. But this is also giving you some passive income because you're holding stocks. Okay. The most important thing is, right, loss recovery table. This we have to imprint. We might be thinking, let it go 30%, it will come back. Let it go another 5%, it will push. A stock which is falling, based on my experience, what I learned is do not try to catch a falling knife, right? It's a saying, because you will immediately get hurt and then you have to spend more money to fix it. So same way it applies. If you are catching that means it's going to have an impact on you or your behavior, whatever. So for a 10% loss, you have to recover 11%, which is fine. We think, okay, that's fine. That's why you cut the loss quickly. The approach is you will be able to recover quickly. But the moment it crosses 20 or 30, look at it. You lose $30, you have to get back to even, you need to make, a stock has to make a 43% move. If you lose 50%, you started a position at $100. You're thinking, okay, and you lost $50. Now to regain, that has to make a significant 100% move. And think about this, a stock which is falling, which is not performing, if it has to cover 100%, forget about not falling like a knife. It has to come back as 100% gainer. At that point, what is that you gained is literally zero. You're just evened out. For that approach, you wait for years. Is that what you have started with? Is that what your plan was? Remember the example 100K we talked about? I'm asking for 100K. Then you're asking, what am I going to get on a day-to basis or month basis or yearly basis? You clearly have a plan. The first year, let's say we decided on agreeing for a monthly basis or a yearly basis. First year, I'll say you're going to get 25% returns every year. That's the possibility I see here. and then I don't bring you 25K, what are you going to do? Right? You're gonna immediately think this investment is not correct. Let me cut off my vehicle and then look for better ones, or at least let me not trust this person, this approach, this particular investment advice. Maybe not the person is great, he's doing different things, but this particular thing is not working. That's it. Stock market is there, you trust stock market, you believe in it, you can make money, but the ones you caught it, the ones where you put in your money out of the 10 available options, this is not working, you got to get rid of it, because all you can do is the 50% loss. To get break even, it takes years, months, or whatever it takes to get to that 100% just to break even. While you're sitting and doing this, great opportunities other side, they keep going, right? Okay, you need to put your money where it's working. That's a thumb rule I learned in stock market. All right. So, just a few things where, I think Sai shared his screens. If you see the UPSD screen, he got it at 27, I believe, and then 27.5, and then it reached to almost $30. He might have sold some. He doesn't want to give back those gains. He's setting stops above his buy price. How is he doing? What strategies he is doing? Whatever is good for his portfolio, he might be making decisions. But that's where we do our genuine homework. Well, I am entering this stock at this. If it's not working, what is my plan? If it's working, my gains, what is the plan? That's where we talked about stop loss and trailing stop losses. How do you effectively use those? Once you know the concept, how do you effectively use those? How do you plan those even before entering into a trade? Right? If you have that plan, you get into a trade. First of all, you're not panicked. First of all, you're not going to do emotionally buy sells. Then that's going to improve your process. Your approach is very clean, very disciplined. Then the outcome also is going to improvise. Let's say you fail also, you know where you're failing. You're going to block those bad choices and then eventually get into good side of the opportunities, right? Same goes with options. We talked about options. We don't know what kind of risk we are getting into. So let's say you're seeing some gains, you need to continuously scale in. Once you buy in, you see gains, protect it. Today, example I will give. Today I think I shared a Amazon trade. Market was 50-50. I was not totally bullish, but it was trying to make that bullish move. So I took a possibility. Then, based on previous candles, let me see if I can show that. Right? Since, like I said, I'm doing a day trading. I'm not looking for a 1 year out position. I'm not looking for a 1 month out or 2 months out position. That means if I'm looking for a short-term trade, that means what is happening short-term. What is happening today is important. What is happening after next week it doesn't matter. My money is gone. So the moment it was trying to make these moves, I thought maybe there is an opportunity. Not only this, I track other factors of different market indicators, like SPY, QQQ, and then any volatility, etc. Right? So when it is making these moves, I was like, okay, I think I can take a chance. SPY is trying to get to the uh, pre-market levels. But what if it doesn't work? What if it doesn't work, right? Then I thought, okay, I took a 60 cent from my entry. I thought if it is falling 60 cents from there, there's an opportunity that it won't recover or it might further go down. So I said to myself, which might put me into around 12% probable risk. So I gave a chance. It was doing. I entered at 199 a contract, right? Almost, let's say, $200. And it was hanging around 185 to 195. It was not going any higher. It was not going any lower, which is okay, which is giving me chance. And then slowly market broke pre-market levels, and then rest of the names, individual names also started moving towards it. So we got it. But my plan was, if it doesn't do what I was expecting, I will cut it. I have to take the loss. If I don't take loss, it might bleed further. If somebody is okay with that, that was their plan. If they did not put a lot of money, or where, let's say you can take 10 contracts, right? But you took only one contract, considering the uncertainty in this trade probability, maybe you give more time, because of the dollar amount you put in. But technical wise also, you are in too indecisive mindset. That's the main thing. Because dollars is less doesn't mean what market is doing is going to do differently for you, right? The market has 50-50 probability, so you're giving more time, versus maybe I took a chance expecting a bullish move, and then if it does it, fine. If it doesn't do, I want to cut it immediately, because I'm taking a risk exactly at the opportunity available. So I'm going heavy with the risk probability in my direction. So that could be me, right? So like that, once I have it, it's easy to plan my different trades. So it started moving. It started moving. After 2 hours, I got 25% return. So I said to myself, just because I waited 2 hours, I want 100%, it won't come, right? It is not possible. So my mindset was, just by levels, what market is doing, I'll take the thing. And I think I scaled out at 250, I scaled out at $3, whatever, just by following how market is reacting. It also came back a little bit, but the initial scale out and the later scale out of almost 65 to 70% of the position helped me wait on the big drawdown. Basically helped me really wait on these candles almost losing, you see, almost up to here, but it was not really performing. Then I said, okay, it's done, time done. But if I had not taken the money on this way up, what will happen? We panic and sell on very next candle, and maybe it just keeps rising. I don't know. That approach you have to build slowly. The only reason I was able to give time for this trade to work was, I initially took something out with $50 profit. If I had not taken that, maybe this candle, boom, I will sell everything out, right? So it's important how you really scale out. That is going to relieve pressure off of you, and you're going to let the trade work for you. If it's not really working, then you will get out. Okay. And on an overall summary, the key takeaways are, you need to have a risk management plan in place. Very important. If you want to be a long-term investor, then diversification is going to help you reduce the risk. The main very important criteria is based on your risk plan, how you're going to position size that fits your portfolio, right? Once you have that in place, how you're going to execute your stop losses, how you're going to execute your trailing stop losses is going to make a bigger benefit for you. Okay. Out of all this, right, you stay disciplined, you learn from your losses, you re-implement it, and you develop a consistency. That, with continuous monitoring of your trades, monitoring of your approach, correcting, you might get into a very good consistent pattern where you're seeing much better gains. That is the entire aim of how you drive your thought process before getting into a trade. Without having this, if you get into a trade, you might have you're clueless. You're just clueless. So you will be doing all kinds of mistakes, and you don't even have track of what mistakes you're making. Indirectly, it's not going to benefit you for that as well. Okay. On that note, if you have any questions, I will be more than happy to answer. I will stop sharing, and then I will also open, allow participants to unmute themselves. Now, anyone who wants to talk, you can unmute.
Hey, Dhanu, this is Rosalind. Thank you very
Rosalind.
much. Very nice session, very well explained. Quick question on the risk management pack.
Mm-hmm.
Say, for example, like just share some example. If you like have $100,000 portfolio,
Mm-hmm.
and do you look for like stocks? Say, for example, you buy stocks like in the threes, like AUTL,
Right.
CRVS,
Right.
and yeah, diversification. I understand. Don't pick all pharma. Don't pick all. Have some good ones in your portfolio, because the first time I got burnt like anything, like with over
Right.
$150,000 loss.
Right.
And being very new to trading, right? I didn't understand this position sizing and stuff. So how do you suggest? Like, do you pick stocks within the $3.5 to $4 range, then say, okay, like ASTS or like some other like 10.
Right.
Okay, for this you get only 1,000 stocks or get this much. Because see, in order to see the benefit, the volume has to be large. Buying otherwise I was buying 20 or 50 shares, but it's
Yeah.
not doing anything.
Correct. So I
So how
think,
do you
yeah, I think, see, that's the challenges we have, right? That's where what am I doing right? What am I doing wrong? And it's a continuous improvement. Again, based on my experience, first I used to do only options because mine is I'm a small player. I have a small
uh-huh,
accounts.
uh-huh,
So my probability thinking was if I do options, one day you put 1 grand, one day you put 3 grand, 10x play, 30K, you will get it. If I do 2, 3 times of that, maybe I'm going to in a medium account or something that I can try for. But with options, that is never a reality. Okay. From there, I thought, okay, let me do this thing. When I continuously had, I used to see gains and they evaporate overnight or within short time. Then I was,
correct.
what is the approach? Okay, now small cap, 20% gain you will get it if it goes from 2 to 250. Very nice, 25%.
Uh-huh,
That's where from that mindset, now I'm starting to think it's not about 2 to 250. What if it goes to $1, right? But at the
uh-huh,
same time, without doing small caps, there is no bigger gains probability or no multi-bagger opportunity because like SMMT or any other stocks, right? So many work, so many go. There was stock called SCRV, there was stock called ASTS. This happens with few stocks, then we think, okay, this is where the money is. So my approach has been, I have to cut down even this micro penny stocks and then more focus between 10 to $25. Okay, I need to have this small cap stocks between 1 to 10. Definitely we need to have, and 10
uh-huh,
to 25, and then biggest port safety net stocks. If you see, earlier I used to never trade stocks with 30, $40, but now I get into AFRM, I get into UPST. The approach I am taking there is, let's say you said you have 100K portfolio. Position size more or less should be 8% or less. The more effectively you are managing, you can go here and there, right? Because you put 10K into one out of 100K, that goes in your way, you're making money. If it's not going your way, you are not really, really into a situation where you need to your bank account, right? That's the main thing.
correct.
You don't want to go to our bank accounts. So, but based on this risk level identification also, now you can take, if you are taking a 2 grand position with this mid cap stocks, now here I can take at least 5 grand, one and a half size more than that approach, which quickly gives some returns on the upside. Even worst case comes, I'm leaving some cushion to be able to size it. If for some news, some swipes happen, some crazy downside might come. That's just a quick flush, quick, 1, 2 days thing. It could be like August 5th, right? Black
Mm,
Monday. Then in those kind of unknown certainties, maybe that question will help me to still stay in the position considering what has happened in the market. But if it was that's what we talked earlier, market condition or the stock condition. If the stock condition was bad, although market was supportive, that means my initial risk taking is good enough and I'm out of that stock based on my risk plan, my level plan, or whatever.
mhm,
So bottom line, the approach I learned after a few years, and there is will be continuous learning from here on too, is option trading. Do not do heavy or do not do unless you have profits. Period. That's the rule I wrote. If I don't follow that rule, I will go back to bank account again. Very simple.
Mm-hmm.
The second thing I'm trying to learn is look where the opportunity is. Don't look that some penny gainer you get into $2, it will go to $10, $15. No. So you need those to get a jump in your portfolio. But what if they don't work is what I'm thinking more. So for that, I'm limiting those plays to certain level and slowly starting to get into mid size, $20, $30, where you have good safety. Sizing could be little more extra, and the returns also will be quicker because like I said earlier, right, every stock will be by percentage gains more, ATR, ADR, you name it. So even let's say I go with 500 stocks in UPST, that's a 15
Mm-hmm.
grand position. If it
Yeah.
moves $1, $2, see, that's exactly what I did with UPST, right? 600 stocks, it moved $4 from my entry. Okay.
Mm.
I made from yesterday to today 24 grand. That's purely by seeing what market is doing. Market was holding. UPST had a drawdown from $45 to $33, 30, 40
Yeah.
in few days because market conditions were weak last week. A strong performing stock on drawdowns will
Mm.
definitely bounce. It may not continue its trend again to the upside completely, but it will
Mm.
bounce. That's where I was looking for the money opportunity. So everybody has to have their own plan, their own way of looking at things. But along with this, the biggest thing is what if it doesn't work? Well, 600 stocks, you lose it $1, $2, you can take 1K loss quickly. Well, fine. That's why I said the loss, the stop loss would be around a bug, I think $1 or something I gave. Okay. Luckily,
Mm.
it moved upside. Luckily, we made money. And I'm still holding it only with the reason that position was not my determinal for my portfolio growth. That position
Mm.
was an opportunity for me. I'm taking the advantage. If it works, fine. If it doesn't work, it's not impacting. That relief I have. But let's say in the same scenario, if my portfolio was not doing really well and I saw
Mm.
this opportunity, I took this opportunity and it did what it did since yesterday to today, I would just grab my gains and sit quiet because
Mm.
my portfolio from a downside, it is getting better now. Let me
Mm.
not ruin this betterment. That's where the greed we are talking about, right? I don't want
Okay.
to be greedy. My right now, my focus is maintain my capital. So I'm down on that. I don't want to take the pressure. So let me take the gains. Instead, in this case, my other positions were doing good. Some option contracts did good. So, like Google, right? This is something, all these are shared. Some I play
Mm.
which might be in loss, which I don't share. Some might be, which I don't share, might be doing like FBLG, right? Quick
Mm.
$1 move is a big move. So, so Google, right? Yesterday placed around 1 o'clock or something. This morning you see 120% gain overnight. That gave me cushion to let the UPST work its way, right?
Mm-hmm.
If I didn't have that, and maybe Google was going the other way, I would just say, you know what, one bad
Take the
trade,
gains.
one bad trade compensated my good gain. I see the long-term projection, but for me, right now, my account is not in a level where I can think of what happens after a month or what after a year. Right now, let me think about getting to my capitals back, something like that. Then I take it. So that's the approach.
Yeah.
I'm slowly starting to,
Okay.
improvise and learn. Still, my
Mm.
mind and heart goes to, catching this $2 quickly. Oh, we can make 100%, but
Yeah, it is very hard, it's like even
right.
with my positions, I think still how to
Yeah.
get out of that loss itself is, and then I sometimes take the risk. Then I wonder what will happen, whether it will go up, whether it will go down.
Mhm. Yeah. So that's the approach I took. But definitely, if any of our users have, this is the right place to talk. We exchange ideas. I'm planning more webinars. I'm not that professional yet, but I'll try to share what I learned. On that point you just brought up, Rosalind, what I improved over years is cutting my
Mm.
losses very, very, very quick. I
Soon.
really do
Yeah.
not care what happens to that stock tomorrow, because right now it doesn't help my account. So I don't care. I am cutting the losses quick. What it is giving me is, it is giving back my capital availability if I
To
see a
use
better
to,
trade.
that
Yes.
is what even though Sai told no that OCGN, I'm not able to do it, because
Yeah.
I
That's a
already had
mindset.
so much. Yeah,
Yeah.
I had so much of $15,000, $20,000 losses on Euxin and everything. So
Yeah.
OCGN, I'm like, I have like 10,000, 12,000 on that. But he told just sell it and use that money, put it in something else. But I'm not able to do it.
Correct, correct. That's the thing, right? The
Uh,
more loss it becomes, you won't be able to do it. If it was, let's say, 1K, you would have cut
uh,
it, because you
yeah.
think this 1K I
Yeah.
can make it
But
elsewhere,
yeah, yeah, correct. But when
right?
it is $10,000 loss, how can I make that 10,000 now?
Exactly. That's how we think, and we sync up. And you saw the table that 50 goes
Yeah, yeah.
to
That is what is
50%,
yeah.
70 goes
That
to
is very
90%.
eye-opening. That table, I wish everybody understands because I did not understand and I never saw a loss recovery table. So
Correct,
I
correct.
just saw it recently in the group, right? And then I
Yes,
was
yes,
reading
yes.
that
Things are
table and
getting
it is
changing.
really very valuable because I have 97%, 98% losses on so many stocks.
Exactly. That's the thing. Imagine all those. See, we think like we failed because we picked this stock, that stock.
Yeah.
See, great companies in the
Hmm.
drawdown, every company today we are talking hitting all-time highs are 70% down. Okay.
Correct.
So this small cap, just like I gave this example long ago when I started off trading,
Yeah.
right? A person who lost the job, let's say you and I, both of us lost the job, unfortunately, touch wood, it should not happen,
Hmm.
right? But you saved 100K by having a plan, versus I did not have any plan, and suddenly job is gone. Now I have to borrow from credit card, from banks, etc.
Correct.
Now that I survived because because of this leverage, thanks to banks or whatever you call it, but or borrowed from a friend. Now to pay this back with the interest rate and all, the moment we both got a job after 3 months, both exactly same time,
Hmm.
you are up and running and you're planning the next things. Versus
Hmm.
me, I am in debts. First, I need to clear this, and then I'm like, okay, it adds pressure. You won't be able to pay off because you have your own things on a day to day, and then interest is eating away. So this is exactly what happens if we don't plan well and execute it. So
Hmm.
yeah, I know Venkat had questions. He's a passive investor, but this is the time we speak and learn from each other, right? I want to learn from you all. So Venkat, if you have any question, feel free. He was the first user to join. We had a little chat.
Hmm.
So
Yeah, actually, the question I had is like, see, we have like portfolio diversified, right? Is there any way we can do the risk management on any index based instead of going on particular stock against?
yeah. See, market mainly, SPY, QQQ are well-known indexes, right? If you
Right.
want to do small cap, let's say now the rate cuts and all, uh, this one TNA, IWM are the things you need to look at where it's going to perform. Let's say you don't want to do semiconductor stocks where each one does a different thing each day. You can look at SMH, SOXL, this kind. So we have different for different ETFs for different segments of the market, right? If you don't want to focus individually, yeah, why not? We can 100% do. That's the thing, right? Over period, what kind of mindset I have first. I think I did not speak about one thing here, right? For me, when I put a 3 grand position in option, it doesn't shake me at all. It's fine. I already planned this is zero, especially options. Versus a person who put $100 also, you would be like, okay, I'm down 30%, I'm down 30%. What I need to do? That's where we develop mindset, what works for me, what the kind of emotional mentality I have and all, right? So yeah,
Mm.
index are there. It's just that we need to have knowledge about okay, what index, when they might work, etc. So my thinking right now, IWM and TNA could be the good potential bet for the next few months, at least until December, hopefully.
All right. Yeah. That's what I have. Thank you.
Okay. All right, guys.
Hey,
I
this is
think
Kedar
yeah.
here. Do you have
Yeah,
1
Kedar.
minute?
Oh, yeah, absolutely. I mean,
Yeah,
we
thank
we
you.
want to cap this to 1 hour. That way people can listen. If they,
Okay.
right? If the video is 2 hours, they will say, okay, next day, right? So,
That's true.
yeah.
So, are you Dhanu?
Yeah, I'm
DAMU?
Danu. Yeah,
Okay.
DHAMU.
Yeah. So, first of all, I really want to convey my thanks to the entire Think Sabio team. I am part of this Think Sabio for last maybe 2 years or more than that. I'm not a very active. I'm because I have another full-time job, so I'm not very active. But the thing which I want to ask couple of things is I'm a big follower of your option alerts. I would say that.
Right.
But what I have seen recently is I think couple of people are sending the alerts. One person is sending the alerts. He gives what when to enter, when to exit, and what would be stop loss if it goes below this. The
Yeah,
stop loss will
those
kick
are
in.
bot rates.
Correct. Oh, those are bot trades.
Yeah,
Oh, and I think other one is you say DA
yeah,
always.
yeah.
Okay. So for that I have a question.
Sure.
You generally never say or mention, okay, what would be the profit margin, like a 10%, 15%, you said. And so I generally get confused. Should I buy this or should I just leave it?
Right.
Good
Okay.
that you are here today.
Yeah.
So, for example, Amazon. So I don't know when I should be exiting. I was not knowing my exit plan, when to exit up, when to exit down. That's
Right.
why I was a bit confused, and that's why I was not taking your trades. To be frank with you, I'm sorry.
Right.
Don't
Oh,
don't
that's
take it
okay,
wrong.
right? No, not
Yeah.
at all.
So, so this was the reason I said, okay, today I have to join and ask you, because generally your trades, when I was following your notes, your trades are generally, if you say 80-85%, it goes up. But then I was not confident how to buy this because there was no exit plan. And
Right.
if you can share some
Okay.
thoughts on that.
Sure. So, see, depends on the trade opportunity. That's one. So let's pick the one I shared today itself, right? First of all, my focus has been what would be my stop loss. When I give this alert, especially in alert section, I don't care about my $300, $3,000 position. Also, it doesn't shake me at all, like I said. But the thing is, other side audience, they are buying blindly. What are they going to do? They don't have a plan in mind what
Really.
I have in my mind. They
Right.
can see it. So
Right.
naturally, they might not cut it on time. They might lose. It just keeps bothering me. That's why I feel very like, okay, little stressful to be honest. When I give the specific alerts, if I have to give levels in the chart, it's like quick. I will tell what I like. I can add so much of text if I need to. I can post continuous screenshots. It doesn't, harmony of that particular alert group will not be spoiled. So on the to get back to your question, today's Amazon trade, I was even if before you brought it up during the session we discussed, I was in a mindset of 50-50, whether it's going to work to the upside or not, because it was just trying to make that bullish move, right? And that bullish move can evaporate in no time. It can just go completely bearish. If that was that's why I more emphasized on the risk, because you don't know for sure if it's going to happen. There could be some trades. For example, I think 2 to 3 days back or last week, I believe, I put a Tesla trade. It was confirmed that market was bearish, and this had a good gap, good big gap of $4-5. So the probability of that reaching to that level of $4-5 is very, very, very much uh, kind of okay, confirmed, right? There is no guarantees in market, but there I have a level where to take exits, what to do, what, etc. Here the levels are like very tight, very tight. The day high was $182, 182, if I'm not wrong, or 186, sorry, 186. We entered around 184.9. So that $1 margin is only there. See, if I say like the bot rates, right? The bot rates, most of the times, if you see, it's 15 cents profit or whatever. It's a good profit. It's a decent gain percentage wise. But for me, market runs, they continue to run. So I want to take the biggest advantage based on how market is doing. So for those, sometimes, targets are very hard. So that was the exact thing going on in my mind. For that reason, what I mainly focused on was on the stop loss. You take this trade, you have a plan for exit, forget about the upside. That's why upside, if it is there, I will continue to update. The moment I do, you believe it or not, let's say I want to sell it at 230, whatever price, I will prepare the message. Sometimes I want to send that first, that way you have that opportunity to send at
Yes.
sell it at max probability.
Correct.
But sometimes what happens, if I give 230, in one candle it can come back to $2. Okay.
Yes.
Then people will say, I did not get this. How did you catch this? I mean,
Correct.
people may not ask.
People
but
who are new to
Yeah.
option, definitely they will ask this question.
yeah, that my integrity, I want to be like, whatever I do, I want to share. That's all. I don't want to, put whatever numbers. So then I feel, okay, if I have 230 execution, then I sell it to them. Even if something goes wrong, I can show it. Dude, this is what I did. So for that reason, but I'm prepared, I'm trying. So to put it simple, it depends on the trade opportunity. Today, when I took Amazon, to be honest, market was in indecisive mode, trying to make a bullish move towards upside. And
Okay.
it really did, market really break to the upside. That's why it worked. If market had moved 1 point, I think it has to move up. Once it touched that resistance and pulled back huge, we would have had not got the trade what we got. So depending on that, we take the approach of how to execute that. I know
Right.
all this. I cannot
Yeah, go ahead.
sometimes put it in a message or whatever, but this is what I was going in my mind when I was
But
taking.
is it possible to give at least the stop loss? Okay, if it goes below this, sell it. Right now, I
Today
don't
I
know what
did
my
that for that.
exit.
Yeah. Today I did
Okay.
that
Okay.
184.20. I still remember
Okay.
184.20.
Because I
Amazon
was afraid, because generally 90% of the time, whatever that bot is sending, I'm buying it. 90%.
Okay.
And I don't know how many people are listening here, guys. That is really,
Yeah.
I would say the probability of profit is 80%, to be frank with you guys.
Yes. Yeah. It is
So
working. Yeah.
yeah, it's pretty good working. And now from tomorrow onwards, I'll keep eye on you. Because I'm pretty good not pretty good, but as you said, my portfolio is pretty small. That's why I don't want to get into shares. And my options are also, I keep exact stop loss given by your bot. But now going forward, I will just keep eye on your stop loss as well, and I'll start buying that.
Yeah, but I hope you listened to what I just said a few minutes
Yes.
ago to Rosalie.
Yes.
That's how I thought
Yes.
too. My account
Yes.
is small, options, and I kept on going to bank account. Rather, if I had focused on just stocks, I would have never went to bank account. Again, you do what you do, but I'm
Yes.
sharing my example. So
No, but as you say, absolutely right. I had my overall portfolio. I said, if I go down 20%, I'm just going to close this trading accounts. I'm going to close it. That was my criteria. But by God grace and by things I've used alerts and everything, I grow almost 55% by now.
Okay, good.
Yeah,
Yeah,
in the
cool.
in the
See,
options.
if you have a question also, right, you can ask in chat. That gives leverage for me to explain my mind, what is going on in my mind and all. Sometimes I'm trying to share also all those also. But
Okay.
if somebody is asking, it makes me, okay, this is clearly what I'm thinking right now. This is how I would execute. You please plan yours. That way, you are also very clear.
Right.
Again, I don't mind.
I was not sure whom to ask. Now I know whom to ask.
I
So
think
I will
my
definitely.
name, it says I think DA. I don't know what I put, but yeah.
Yeah, no, I saw that. It is DA. It is DA.
Yeah. Okay.
Yeah, and mine is KD. So yeah. And again, please convey my high regards, my high thanks to all the entire Things Have Your team. You guys are really awesome and doing great job for our
I'm
community.
I'm also volunteer. Actually, I'm thankful to
Oh,
people. That's all.
okay, okay.
Yeah, because
But
of
yeah,
them I
please convey
learned.
my.
Because of their
Oh yeah,
reports
I'm
I learned.
learning every single day. Unfortunately, I cannot put a lot of time because of my other job. But whenever I get time, I just go to thingsavvy.com and learn a lot of things.
Yeah, good. Okay.
Yeah, that's all from my. Thanks a lot, sir.
Okay. Thank you, Kedar. All right, guys. I know this session. We want to cap the time just in the interest of people who watch the recording. I will say during question and answer, ThinkSabio to clearly highlight Q&A, and I think YouTube gives the thumbnails too clearly. So if any questions I can answer, maybe 10 more minutes. Otherwise,
No, it was a very, very helpful session, Dhanu.
okay.
And
Thank you.
someday, Dhanu, in the next few days, I've been like swamped, but I wanted to chat with you. So whenever you
Sure.
have few minutes, no, we'll talk offline.
Yeah, absolutely. See, I believe in only one thing. I learned everything in ThinkSabio, and then through social medias, whatever people post, good and bad. So the more we learn, we share, we see their perspective, we get to learn, and a lot of people get to learn from each other, and they get help. They might grow their accounts, which is the happiest thing. So I'm more than happy. I don't really care to spend
Yeah,
whatever time.
I wanted to share the portfolio and then just ask some questions and stuff. So
Oh yeah, absolutely. Just a disclaimer there, no financial advisor. I have
no, that's true. Yeah.
degrees. So
Yeah.
I'll just share what
No,
I
it's
would
just,
do. That was my situation. Yep.
Okay.
All right.
Have a
right,
good
guys.
night. Yeah, bye.
Yeah. Thank you all for
Thanks,
joining.
everyone.
Have a good rest of the day. Bye-bye.
Yeah, good night.
Take care.
Bye-bye.
Thank you.